Hello, everyone, and thanks for joining us on Silver Stock Investors interview. Today, we have the pleasure of speaking with E.B. Tucker, former precious metals fund manager, newsletter editor, and currently a director of Metalla Royalty, a growing precious metals royalty company. E.B. is with us to discuss his outlook on the economy, precious metals, and in particular, silver. So, E.B., we've known each other for a while. Welcome to Silver Stock Investor.
Thanks for having me.
Pleasure. How are things in the Sunshine State?
Fantastic. I mean, if you're going to be stuck in a pandemic, you want to do it in Florida. I mean, Florida, most people don't know this, but Florida is a giant state. I mean, if you drive from the Keys up to Tallahassee, you've almost driven the distance of Tallahassee to Chicago.
Wow.
So people miss that. Another funny thing about Florida is it's got an immense amount of cattle. So
Really?
you drive across the state and you think you're in Texas. I mean, it's crazy. So anybody out there, that you have this opinion of Florida, which there's lots of, strange things about Florida too, but it's a really good place. And I recommend, you drive around and hang out because it's not a bad place to get stuck.
No kidding. Like you say, especially, through this kind of year that we've had. EB, you recently wrote a book about gold investing called Why Gold, Why Now? And I've read that book, thoroughly enjoyed it, thought, if someone wants to start to understand this whole space in a how did we get here? Why are we here? And what do I need to do next in a basic way? It's tremendous. It's a fantastic overview and introduction to anyone who doesn't know this space well. So how long did it take you to write this book?
This was 23 days, Peter. So the book, the cover is right here above my head. So it's available on Amazon and Audible and kind of all the major formats. But let's make sure we focus on one important thing. The subtitle of the book is The War Against Your Wealth and How to Win It. So people need to understand, this is not a book that's lecturing you about, the Romans or something you don't care about. I mean, I gave this book to a friend's wife in Palm Beach. I had dinner with them this week, and she said, I actually really enjoyed reading the book and had no basis of knowledge about the gold industry prior to reading. And so that's the idea, was to say to people, look, you don't have to have a lot of working brain cells to realize that this year, there have been some radical changes in your financial life. I mean, the governments have printed trillions of dollars to attack this problem that a year ago right now, none of us had even heard of. And so there will be consequences. And this isn't one of those, bread's going to cost $100 a loaf, so you better get ready. It's not like that. What it says is, why do you go to work every day? You're trying to get ahead a little bit. Otherwise, you wouldn't do it. You would lay around and collect welfare and just not care. You're trying to build something. So deep down inside, anybody that's watching us right now is learning. They want to learn something. And the reason we want to learn something is so that you can protect what you have, grow it, and one day you can live off that and not be dependent upon someone. No one wants to end their life, asking someone to help them all the time. You'd like to live out your final years on your own, on your own free will. So that's why the book is so important. Now, what happened was, I have a friend who is a Zen master. I don't know if you know this, but to become a Zen master, it's very easy. You have to start out wanting to become a Zen master and then give up wanting to become a Zen master, and then you become a Zen master. It's very strange. But this guy is a real piece of work. I mean, he drives a Porsche and the back license plate says "Awake." You can kind of get the picture. And he's very old, and he's very small, and he's got a great sense of humor. And so I was with him, and we were talking about just stuff in life. This is about April 10th. And I was telling him about gold because he was saying to me, something is really wrong. If you recall, this was right in the middle of the shutdown and all the stuff. And he said, I don't really have much experience here, but I know something's not right. And I don't know what to do about it. And so I was talking to him about the stuff that's in the book, and he was like, EB, nobody knows this stuff. Nobody, he said, I've got a wall full of degrees, and I have no clue what you're saying until this moment. And you got to do a TED Talk or something. And I said, I'm not going to waste my time, TED Talk. people just watch that on YouTube and it's useless. I mean, let them figure it out for themselves. And I said, well, maybe I could write a book though. And that's where the idea came from. So Peter, then the next day I sat down, I wrote 2,000 words per day for 23 days. The book's 50,000 words. And boom, that was it. And it came out like a bolt of lightning. And it's important. It's not the type of message that you spend 4 years working on, whenever you get around to it, when you have time. This was 24 hours a day for me for, 3.5 weeks or so, because it had to get out. And if you look at what's been happening, I mean, we've only seen the beginning. That's what people need to understand. This is not, well, gold's already 1850, so it's too late. Forget about it. There's about $12 trillion worth of gold in the world. There's probably about 280 trillion worth of debt. That's a guess. I mean, it could be closer to 300. We'll get data at the end of the year. Gold is not popular, okay? People haven't caught on, all right? It's early days, and you don't need to learn about gold so that you can make a fortune. You need to learn about gold to protect your wealth. You need to learn about royalty stocks to make a fortune. That's a whole different subject, which we can get into.
We'll get there.
Yeah.
It's interesting how you explain how this came about, the book came about, the inspiration for it. And, I think back to, there's 2 dates that really stick in my mind. I probably will never forget them, but March 19th and March 23rd. So March 19th was when the announcement was made that $1,200 stimulus checks would go out. And I remember thinking, I've been reading about how helicopter money was going to come eventually. And then I thought, on that day, well, this is it. This is really it. They're dusting off the blades and they're firing it up, and it's coming. And then on the 23rd was when the Fed said they were gonna support with no limit, buying
junk
bonds.
Junk bonds. Not just the good bonds, the junk bonds. They bought everything.
I can't hear you.
Oh, can you hear me? Can you hear me now?
Yep. Okay. Sorry.
So
better.
the Fed bought not just the good bonds, they bought junk bonds. I mean, it wasn't like they bought treasuries. I mean,
right.
they went to companies that were insolvent and they said, we'll
exactly.
buy those bonds.
Yeah. And there's the jury's out on whether that's even legal. Am I right? That's what I've been reading.
The one with the biggest tank makes the rules. So I don't know how far you're going to get with that argument, Peter.
Exactly. No, yeah. Well, let's move on.
Yeah.
So when I saw those two things 4 days apart, I remember thinking to myself, this is it. This was like the aha moment for me. And I said, wow, this is the beginning of this, new, not new, but this is sort of the start of this sort of last phase, I guess, if you want to call it. And I remember also thinking, and watching precious metals obviously take a hit like the market did, and even the stocks in precious metals. And right around the middle of March, looking at these prices, because I obviously follow them very closely, and saying, you know what, they could go a bit lower, but they're so cheap compared to where they were just a few weeks or months ago. And I started buying. I had butterflies in my stomach doing it, but I couldn't help it. And so I bought, and then I guess a couple weeks later, I bought a little bit more, and more or less, did my final allocation. And, between mid-March and August, things just exploded. And I think it was in that period that generalist investors started to really, at least started to get it, started to pay attention to gold, saw what it did, saw what happened. And also, getting someone like Warren Buffett and Berkshire into the space, who's, sort of had a disdain for it forever, didn't hurt. And, 2% yields, the largest gold producer, it all kind of started to come together. And I think and as we go forward, I think that a lot of fund managers are going to start looking for value, as we've had, the market cycle really, really mature, especially with tech and some of the other things. I can't help but think they're going to start looking at this space and see where it's going to make sense to include.
Yeah, well, I mean, what about, free cash flow yield,
Exactly.
as you know, what that people at home need to realize, free cash flow is, after the company, invests and keeps its facilities up and everything. Anyway, so it's an important number. Now, a lot of the tech companies have none, so are negative, free cash flow yield is just booming in the miners, and nobody cares about that. So we have a long, long, long way to go. Now, let's talk about this from a practical standpoint. A couple things happened in March. So I'm a director of Metal Royalty, which has been one of the top performing. It's a 4-year-old company now. You've known about it since the beginning. So I remember It must have been 3 months after listing, we talked about it maybe for the first time. And
Exactly.
so you've seen this go from $1.20 Canadian to $13.50 or something Canadian, and pay a dividend and do all these different things. And the company's maybe, I don't know, $500 million Canadian size now, or just a tick more, and started at 15, 20 million or something. So you've seen how this thing goes. Now, in March, the stock went way down. Okay, so as a director, you're involved in all these different things. I have heard some of the saddest stories in my professional life. There were people on a list that were big stockholders, and I check in with them, and some of them that I called had margined their account.
Oh, wow.
Not just the Metallo, like the whole account.
Right.
So they have a whole big account. They had a bunch of Metallo, but a bunch of other stuff too, and it shorted and done all these different things, and they lost their Metallo. And what happened was the margin desk, did a force liquidation, and they sold. Wow. And it's really sad because Metallo went down. I don't know what the low was in Canadian, but in the US it was like $3 or something. Wow. And today it's 10.35 here, so yeah, I mean, it's almost a triple from the low. I mean, I think it hit $3, even, I think is a safe thing to say, but we can look at the chart to be sure. But okay, so what's the lesson there? Okay, you don't have to play, swing for the fence baseball to make a lot of money in your life. In fact, you could play what I call Babe Ruth ball, which, I mean, Babe Ruth was eating and smoking cigars most of the time, and he lumbered up to the plate and waited for, a bad pitch and then just nailed it. So, I mean, so you can be lazy, and you don't have to put yourself in a position where you end up losing all of your investments because you were trying to go to the moon, in one shot.
Exactly.
I recommend trying to go to the moon in 20 years. It's a very realistic goal, so it's very possible. Okay, so that's the thing. The second investment lesson that I think people really need to absorb here is, in the book, I talk about a famous a quote that Soros told a famous investor that's a friend of mine, and I read about this conversation in the book. And he always said that there's the bottom, and then there's the test. What does that mean? Okay, so that means, like, you have the low and the stock goes, and you start saying, boy, here it goes. And this is like with gold and gold stocks. You were talking about in August. I mean, in early August, they were just screaming. And then they slow down, and they've been soft from August until now, basically. So you've got like 3, maybe 3.5 months or something where those charts, they all look the same. So they shot up and they go down here. So you have the bottom, you have the rally, you have the test. And the test is a psychological test, because it's going to make you think, maybe I missed it. Maybe I should just bail on this now. I've only got, like this little loss here. I knew I shouldn't have listened to that Peter Krauth. I mean, I should have gone with the Tesla. I knew better. Okay. So what you got to see is you got to, maybe if you have too much invested, then you can't see what I'm talking about, because it gets very emotional. But if you can think clearly, you got to see what's in a real bull market and what's not. And what people need to understand about the gold sector, really the resource sector in general, because we can talk about some other commodities too, is it goes through cycles. And so you went in this down cycle. 2011 was a high. You went down to 2015. You stayed down. You barely started getting any traction, and then all this stuff happened, and you're just getting started. And so you have to think about things this way and say, yeah, okay, let's talk about Tesla. If you bought Tesla at the beginning of the tech cycle, would you have sold it after 20% or something and be like, okay, the electric car thing is over, So no, it's a trend. It's a trend. It's a trend in motion, and it runs until it gets so big that it just runs out of gas or something. It can't support itself. Okay, it runs for a while. These things run for a while, right? So like when Obama was coming in, I was telling someone this the other day. I mean, if you had the royalty stocks, like Wheaton Precious went down to like $3 US, and then it went to over 40. So that, how long did that take? Well, I don't really, about 2.5 years, pretty much. I mean, it was like 25, 30 months or something like that. That was a cycle, that was a time in the market. And during that time in the market, you had pullbacks. That the reason you had pullbacks is because they shake everybody out. People quit, and then it goes again. Okay, just like when a stock's going down, it has a little recovery and sucks people back in, and then boom, down again. So I know this might sound like it's too complicated, but it's not. It's really not. It's so easy. And all you have to do is make sure that you're not so invested that you wake up and look at the phone and you say, I can't have a good day today because I see red, today, and I'm just, we're going to lose everything. I mean, you can't do that. You can't think straight. And so as you go into this gold bull market, the approach is to see it for what it is, which is an adjustment period. Joe Biden is going to be a weak dollar president. Let me just say that again, a weak dollar president. That doesn't mean the dollar is going to be weak for 30 days. It means it's going to be weak. It's going to have small rallies. It's going to go down again. So what are you going to do about that? There are trades that work better. Look at the commodity charts. Nickel, $7.75 a pound. What does that mean? Most people say, well, I don't know what that means. Okay, look, it's been low. It's 5, 6, 7, 775. Okay, nickel, it's going up. Copper, 250, 350. Okay, you see this thing? I mean, I think 450 is the old all-time high. Okay, and there hasn't been a lot of copper mines found. And how are you going to make an electric car? I mean, electric car has twice the copper that a conventional car has. It has average of 45 kilograms of nickel in every single electric car. Where are you going to get that? And so look across, look at the grains, look at sugar, look at all these different commodities. Now I'm not encouraging you to go and be a sugar trader. What I'm saying is this is all part of that bigger trend. Gold is part of that. This is a time for gold. It's a season for gold. And so it's same goes for silver. I mean, silver, we can talk about it. It's a wild metal. Silver is very volatile. And when gold goes, silver goes crazy. And gold has a draft beer and, silver has a Boilermaker. So, I mean, it's just like, that's how it is. It's what's going to happen. And so how do you play that? I mean, we can talk about that.
Well, it's interesting that you mentioned Wheaton earlier because, like you said, and that's something that I've tracked as well. I think it was from about at some point between 2005, 2008, which is the previous bull run. Like you said, Wheaton was up 10 times. And if you're going to look at silver space, other than silver itself, that's probably one of the lowest risk trades you could make.
Sure.
Is owning Wheaton. A royalty company or a streaming company, silver exposure, and large cap, and was up 10 times in over a span of 2 years. So like you said, if people can get comfortable with the precious metal space and start to build exposure and realize that, as you said, this needs to be a multi-year allocation. Be ready for pullbacks. Be willing to sit through them, and wait and watch. I believe most people will see when we get to some kind of a peak or near peak, and you don't have to call the exact top, but you can make plenty of times your money without taking outsized risks, especially in these kinds of plays, and that's how you can protect yourself. Like you said earlier, we're going to work, we're trying to make money, and we're looking to build a comfortable retirement, we need to protect ourselves. It's on us. It's on our shoulders to make sure we're doing the right things with those investments.
Well, the thing that my guess is, when we look back on 2021, 2022, let's call it the first half of the next administration that comes in the US, what we're going to see is that taxes went up. The cost of everything went up. You know, go to the grocery store. I mean, I've had some basic stocks, soup, company, crackers, all the, you know, this very boring stuff. I have some of this stuff, and they've done great, because what's happening is, Bloomberg did a big piece on this, is that there's not as many promotions at the grocery store. Mm-hmm. Go in the grocery store, you used to see about a third of items, roughly, would always be on promotion. And the companies would do that to move inventory so that they could keep their costs under control. They're not doing that. They're selling out of everything. So groceries going up, food inflation's going up. Now wages are going to go up, okay? But they're not going to go up, you know, to the degree that's going to really change your life much. I mean, we in Florida, we voted for a higher minimum wage, and I have all these friends that are, you know, these like patriotic people. They're like, I can't believe you would encourage people. I said, listen, it's not going to be enough. So, I mean, you put $20 an hour minimum wage, 4 years from now, people are like, I'm still starving. You know, it's not.
Yeah.
So, okay. As an investor, what are we going to do? The first thing we're going to do is we're going to let go of all ideological, you know, opinions about how things should be, right? Forget about it. I mean, that's why I don't have a television. I don't get involved in politics. I don't care about any of that stuff. I don't want to share my opinion with the general public. I don't have any social media. I don't want to get involved in it, because it's only a distraction. If you think somebody should be president, you go vote. And after that's done, let it go. Forget about it. Okay. Deal with your life. You know, what are you going to do to deal with what's coming? That's what's most important. So what you can do is if you position properly, is you're going to have higher taxes, higher food costs, higher, you know, expenses, and higher profits. So if you position properly, you're going to say that the bad news is, you know, my grocery bill doubled, and, you know, my property taxes went up, and my wages didn't go up that much. My taxes went up. Good news is, you know, I had a really big profit in my investing activities, and I paid for all that stuff. And I kind of maintained my wealth, you know, maybe increased it, you know, because there's sometimes it's deceptive. You know, you make you look back over 10 years, and, you know, like nowadays when you're a millionaire, it's useless. I mean, like, you know, if you don't quit your day job, you know, so yeah, so everything changes, you know, it's always evolving. And that's obviously, it's a guess, but my suspicion is we'll look back at this moment and we'll say that was the play. That was how you played this smart. Yeah.
Exactly. I mean, I liken it to a train. It's barreling down the tracks, and the brakes are not working, and there's no changing course. It's just going to go farther and farther and farther. And you know, it's like the Fed has a printing press with a dial, and the dial only turns in one direction. You can't go backwards, and as you turn forward, it speeds up. It just keeps speeding up. It's like an acceleration. And
okay. So beginning of the book, we talk about TARP. Remember TARP?
Yeah, absolutely.
2008. That was like 775 billion or something like that.
Yep.
Billion with a B. And remember how big of a deal it was.
Sure.
Frank Paulson he said he got on his knees and begged Pelosi, please, could save the world. And then what happens when remember you talked about the day in March with the stimulus checks or whatever. I mean, trillions, like 3, 4, 5 times that TARP amount in one boom with no resistance.
Right.
So you got to keep up with that.
Right. And today we're talking about, you know, everyone's sort of hoping for a new package, and anything under $1 trillion is underwhelming.
Yeah. Yeah. It's an insult. You know, it's like bringing a cheap bottle of wine for dinner. You know, it's like so. What does that tell you? Remember, we talked about the value of all the gold ever mined in the history of the world. is roughly 12 trillion. I mean, we can get you an exact number, but it's right at like 12 trillion, not much more. So you know, the U.S. overspent by 3.5 trillion this year over what it took in. Then you're going to add another. I mean, you're talking about half the value of the gold in the whole world just in the U.S. Everybody did it. The ECB is now print. Everybody, the Japanese, the Chinese, everybody did it. Talking 10 trillion plus around the world. All the value of the whole gold, the gold ever found in the whole history of the world. Boom, just created out of thin air in 1 year. And what does gold do? It goes up, 15%. But it doesn't have to, it's not a one-for-one thing. I mean, government doesn't go bankrupt. It's not the way it works. It's not a hardware store. It's not like that. It's a different type of organization. People need to understand that. It doesn't have to pay off its debt either. It's irrelevant. I had a lunch with a guy, famous economist in the USBI one time that told me it's totally irrelevant, the debt, and he's right. I mean, it's not the same as it's not like having a student loan or something.
Exactly.
It's a totally different ball game. Now, okay, there are consequences, yes, but it doesn't mean the government's going away. It just means that how do you think they're going to solve those problems that they create? You're going to pay for it. So watch out. That's the deal. And so be prepared for that instead of having a ideological fight with them. Get ready.
Exactly, and that's why what we're trying to do is make people aware of where things are, what's coming, and how to prepare for it. That's why precious metals are so important, so valuable, need to be considered and have a place in everyone's portfolio. And people will have to do some work themselves to figure out what proportions make sense, what they're comfortable with, the risk and the volatility that comes with that. But needless to say, I mean, I'm a silver bull, and the reason I think silver is important is it tends to outperform gold. We know that. We know it's more volatile as well. And so, people can allocate accordingly. But the fact that silver is cheap, I mean, I remember this must have been 79 or 80 when the last sort of big silver bull took place. People were lining up outside banks. There were lineups blocks long so they could go buy silver. They just couldn't get enough of it.
Okay, and the next time you see that, you sell.
Exactly. That's right.
That's like when the UPS guy asked me what do I think about Bitcoin when it was this is 3 or 4 years ago. I said, probably not a good time to buy it. But okay, sentiment, you watch for that sentiment. That's all going to happen. But let's get serious. What does the average person do with their money? So in the book, I have a chapter on how do you figure out how much gold's enough? And
exactly.
I'm not an investment advisor. I've got nothing to sell you other than a book, but I give you a formula and you use that formula to figure out what's right for you. And it might be a lot less than you think. I mean, you don't need to fill your living room with silver, boxes of silver. It's not necessary. So a little bit of gold is your wealth insurance. Then you have your mining stocks. Now, your silver Wheaton type stocks are, bigger companies. Metalla, where I'm on the board, is the top performing royalty company the past few years. Franco-Nevada is a blue chip royalty company. Mavrex is a highly regarded royalty company that is one of our competitors, and I think very highly of them. So you have these types of companies. Now these are pretty stable investments, because what happens when I say stable, I don't mean the stock price can't go down. What I mean is that they're not digging holes in the ground, operating a mine. What they're doing is they're basically allocating capital to buy these royalties and streams. So they have years of exposure to 1% or 2% or a small percentage of production from a mine, but they don't have any obligation to go and do any digging. So if gold turns back to 1,000, some of the mining companies, will go bust. The royalty companies, they don't really go bust. They can have lousy returns. But, Franco-Nevada is fascinating because you have about 25 employees and, companies worth over $20 billion, So you don't need a lot of people to run the royalty company, but you're not actually doing any, they don't need, those people don't have a lot of dirt under their nails. Okay.
Exactly.
They're doing the work on the front end to buy these things. So you have the royalty companies, and in the book, there's a huge amount of of space dedicated to what that means. You know, you buy a royalty, you get a perpetual free carried interest in a mineral property. And that means if the company goes bust, you know, your royalty stays through to the next company. It's very interesting. I don't know any other business that I like as much as the royalty business. Now, some people say that's not exciting enough. I need the chance to make 1,000 times, you know, 1,000% return. Okay, fine. There will be mining, you know, small mining stocks that hit the mother lode and the stock goes flying. I mean, copper's up a lot this year. There's several copper companies that you know, listed in Canada that, you know, have posted high triple digit, almost four digit returns this year. And that's because copper went up a lot and they made a discovery or improved a discovery, whatever. And so you can buy those stocks as well. Now, in the book, I tell some horror stories about visiting these would-be mines in the middle of nowhere, and the staff telling me, yeah, the executives just spent all the money. You know, we're just down here rubbing sticks together and waiting for the stock market to go up so we can sell some more stock.
Exactly.
So how much of that do you want to own? Not that much. I mean, right. a speculation gives you the chance to turn a small amount of money into something big. And an investment, you know, gives you the chance to put a big amount of money to work and expect to make, you know, a modest sum if your investment pays off. You have to understand the difference between investment and speculation. You can't just read like a spam email that you get about, you know, ABC mining company that just started last week, and boy, the story sounded so good, I put my life savings into it. Don't do that. So people are going to do that, and they're going to lose all their money, because it's nothing against ABC Mining Company. Probably they're doing a great job, but the thing is they're in a high-risk business. They're in a high-risk business. The royalty business is not what I would call a high-risk business. You can make stupid decisions. You could ruin a good royalty company. You can make bad investments, sure. But generally speaking, you know, digging holes in the ground, trying to find gold is really high risk, and it requires a lot of money and a lot of patience and a lot of luck. And so when you got a business like that, you want to be careful. And so when people are starting to look, and you say that you're a silver bug, what they should understand is if the gold price goes up, there's a lot of gold projects that can quickly go into production. I mean, or they can increase production. That's not the case with silver.
Exactly.
Most silver comes as a byproduct of other mining or recycling. So you can't turn on the spigot. You turn that spigot and nothing changes. You know, you can't get any pressure. So because you can't ramp it up. And so when you look at the silver universe, you know, you say, I can get exposure to some good mining firms, maybe one or two speculative firms, and you know, they should do very well if the silver price takes off. And take off is what I think will happen with it, because I would not be surprised if in 2021 we see $2,500 gold, $40 silver, let's call it $4 copper, and $10 nickel. I mean, with that type of outlook, you don't really need a whole lot of other ideas. I mean, that if those things happen, you've been shooting fish in a barrel. I mean, there's going to be some serious opportunity next year.
And to your point about risk, I mean, that's why, you know, in this newsletter, in Silver Stock Investor, that's the approach that we take. And from what we know, we're the only ones doing this, to have a silver focused letter that's unbiased. We don't take payments from any companies. It's all what we're doing ourselves with our money. And it's covering the whole gamut. So everything from, you know, how and where to buy physical silver to bullion-backed ETFs, all the way to larger cap, some royalty companies, and all the way down to some of the higher risk exploration plays. So, you know, that gives anyone who wants exposure to silver the whole range of options. And then they can decide, you know, how to weigh that in their portfolio to get some kicker if they want, like you say, from the discovery potential, but as well from the streaming, the royalties, and the production side of it as well.
When silver goes, Peter, it goes fast. I mean, so you usually have got to be positioned because it only goes once. And when that thing blows, that look out, that's it. That's been the case in the past. And if that's what happens again, you don't want to kind of sit around and say, well, I'll wait and see what happens, and then I'll get in there. What I do in those situations is I'm not afraid to start small.
Right.
People say, well, why would you only buy a small amount of it? No, I'm not sure.
Exactly.
Hey, and what happens if I'm wrong? So I only made a small profit.
Right.
Am I going to go broke doing that? I doubt it. So that's how people should approach it. But look, I mean, you're right. I don't know anybody else that has a silver letter. I mean, there's a couple people that focus on silver, but I mean, I don't know anybody that's launching right now a new focus on that. And I think the market's ready for it. And let's see if we push $40 next year.
Yeah, it we'll all be happy.
Yep.
Absolutely. So EB, thanks for your time. And is there something that you want to add?
Well, so just one final thing in closing. I mean, my book, I encourage everyone to check out my book. It's available on Amazon, Why Gold, Why Now? The War Against Your Wealth and How to Win It by EB Tucker. You can get it in Kindle, paperback, most places in the world, Audible. I'm narrating the book. So you can, if you like Audible, you can get Audible. And then when it comes to companies, Metalla, set out from day one to build a portfolio of similar sized, third-party gold and silver royalties. We're at maybe 63 of those, and we started at 0. So that's good. You can go to the website and see all the royalties and how they work and answer most questions. But Nova Royalty, we haven't talked about much. And Nova Royalty is very similar to Metalla in structure, but it focuses on nickel and copper. And what people should understand is that nickel and copper mines are huge, and they cost a lot of money to start, and they usually run for decades and decades. There's no such thing as a small scale nickel mine. And so we started seeing the electric vehicle trend for what it is, which is all the companies now are saying they're not going to have gas cars anymore. And all the power companies in the US are wondering what they're going to do with all the solar energy. They got to keep it in batteries and redeploy it to the grid. So we started Nova to take advantage of that. The ticker symbol for Nova is NOVR in Canada, NOVR. That went public October 1st and has done quite well. And like I say, the approach is the same as Metalla. I'm on the board of both companies. Companies have similar shareholders and similar philosophical structure. And Metalla is MTA, and that's in the US on the NYSE and also in Toronto. And so people, I'd encourage them to read the book. I tell you how we started the company, why we started the company, what my stance has been. I'm only a director. I don't know. It's not my company. So I get elected to be a director every year. I appreciate the shareholders having faith in me. And I don't know if that'll go on forever. It's funny because everyone sees this company, they say it's my company. It's not my company. I've bought a lot of stock. To this day, I've never sold any stock. I've bought tons of stock in the company. I'm very enthusiastic about the royalty business, and it's really been a pleasure to guide and help the company to grow to this point. But the book tells you what it was like before when it started. Okay, so that's important. It tells you my relationship with Brett, the CEO. We were asset managers together in the past, and tells you all about that. And it's really a unique chance to I also tell you the beginning of Franco-Nevada. And a lot of people don't know that. So there's a lot of very special stories about how Franco started, and the success there has just been incredible. So anyway, check out the book, check out Metalla, check out Nova Royalty, and let's do this again next year and see how weak the dollar is under Joe Biden and how high the silver price goes.
Exactly. Well, full disclosure, I'm a shareholder, a happy shareholder of Metalla. And I've read the book, cover to cover. I highly recommend it. I think that it's probably one of the best ways for anyone who's new to this space, even people, there's a lot in there. Anyone who's comfortable with this space and has been around it for a while still has a lot to learn from that book. And maybe eventually you can do a Why Silver, Why Now version of it.
Maybe so, or why nickel? Why now?
Exactly.
Who knows? Yeah,
Exactly.
something like that. But I think the stories probably, or what people say mostly they like, is because every chapter I tell some story about something I've done, or something, and it really brings it to life. Because I've been seen some bizarre things, and it's fun to tell people that, because they can feel like they're there, and it's easier to learn when someone's taking you on that kind of journey. It's not a lecture. So anyway,
Exactly.
but Peter, thanks so much, and
Pleasure.
let's do this again, and happy holidays to you
Thanks
and
so
to
much.
everybody watching.
Thanks so much. Appreciate your time, EB.
Okay, talk to you soon.
Cheers. All right, cheers.